Martin Wolf, welcome back to the podcast.
It's a pleasure.
It's always a pleasure to speak to you, Martin, even about somewhat depressing things. We're recording this after the Senate has passed a version of the big, beautiful bill. It's kind of amazing how Trump manages to invent these terms that we then all dutifully use. The House, as we're speaking, has not yet passed the bill. By the time that listeners are hearing this conversation, it seems possible, perhaps likely, that the House will have passed some version of the big, beautiful bill as well. What does this bill tell us about the governing philosophy of Donald Trump and the nature of his coalition, and what impact is it going to have on the American economy?
So I suppose the headline, which is important, is one, objectively, he governs in the interests of extremely rich people. That his fiscal policy, so far as it can be defined, is completely consistent with the priorities of the Republican Party since Ronald Reagan, at least, which is the aim is to cut spending, particularly on programs that benefit the poor, and to cut taxes dramatically on the wealthy. So this is a very traditional, if you like, Republican view of the priorities of the fiscal policy, and is in no way populist as you would normally define it. And I have called this now for 2 decades, plutocratic populism or pluto-populism. It's pseudo-populism. The second thing that is very clear about the fiscal priorities is that he really, really, really doesn't care about fiscal deficits. The scale of deficits they're prepared to contemplate, and this has now been consistent with the tax bill that was passed last time, and one of the things they did to make the tax bill look palatable last time, I think it was in 2017, was to say that the big tax cuts will expire now. But one of the things they're doing now is to extend those tax cuts. And they say, well, this isn't really a tax cut because we already committed ourselves to this tax cut, even though we promised that it would expire. So not only don't they care about the deficits, they're perfectly prepared to lie about it.
There's a lot that's interesting in this. I mean, I think the first striking thing is that Trump was elected as part of this rather striking political coalition, which looked like his party might be starting to build a multiracial working class coalition. The Democrats now really dominate the votes of highly educated, affluent people in the most well-to-do parts of the country. There's a famous graph going around which shows that Kamala Harris's coalition in socioeconomic terms resembles rather strikingly that of Bob Dole in the 1990s. The Republicans, of course, have hugely expanded among the white working class over a number of decades. I've had many other similar movements and parties around the democratic world. But they have also started to increase the share of the vote among non-white working class voters. And I guess it's one of the strange things about American politics that Democrats have this coalition of very wealthy, well-to-do people, but still feel in some way like their natural thing to do within limits is to actually serve the interests of working class voters that no longer really vote for them. And then conversely, Republicans, who certainly have some support among the very, very rich, are now supported by a much more proletarian coalition. But when it comes time to writing a budget, they sort of default back to, as you're saying, sort of engaging in budgetary policy that in some ways could have been put forward in perhaps a less blatantly irresponsible way by Ronald Reagan. So help us understand, where this is going to go in the long run. I mean, do you think that these political parties are always going to be at cross purposes with their coalitions? Is somebody, a successor to Donald Trump, going to realize that really where their coalition lies today is rather different from where Ronald Reagan's coalition lay in the 1980s, and that they should follow through on that in public policy? It's kind of quite a remarkable moment in that respect, I think.
I think that's an unbelievably important question, and I have to be completely honest, I've been somewhat surprised by this. So if you think of populist parties nowadays, there are quite a number, notably in Europe, that are pursuing the sort of policies you would expect, in the sense they're nationalist, they're hostile to immigrants, but they also are quite supportive of welfare policy. Perhaps the best example I know of is peace in Poland, which seems to have exactly that combination. And if you think back to the interwar period, well, you know, that's pretty clear, at least to some extent, of the policy, the economic policies in the early period with Adolf Hitler and also Mussolini. He was very interventionist, very industrialist about creating new industrial jobs for the economy and so forth. While not only what I've described and you're describing is true, they're just scrapping all the subsidies for clean energy, which were popular. They were generating lots of investment, lots of jobs, including in red districts. So if you look at this, with the exception of the tariff case, the tariff issue, it's really laissez-faire. I mean, quite brutally so. And again, if you think of Trump intellectually, which is strange, it does bring you a bit back to the period he admires and loves so much, the late 19th century America, which was laissez-faire domestically, highly protectionist, so nationalist in that sense, and intensely anti-union. The big difference, and I have pointed this out in columns from that period, which is sui generis to him, is that in the era of McKinley, which he loved so much, they had enormous immigration. Now, the question, though, is, as you say, can this last? Is that a sustainable coalition? I suppose there are for economists tend to assume, and the evidence used to support this perspective, political scientists felt the same way, that economic conditions really mattered. And the story we tell about why the Biden administration was defeated, whether it was Kamala or Biden, was that inflation exploded. And because inflation exploded, people's real incomes were reduced for a while, and that was a terrible shock. And so economics really explained it. In the end, it's the economy, stupid. And James Carville's famous remark. And that's by and large how we've analysed not just American politics, but the politics of most countries. Well, Trump seems to be betting on the proposition that isn't true. At least that's certainly how we would view it. Now,
I think you may get that wrong. I mean, it's striking to me.
I hope so. I hope so. But there is one, just that one. There is an alternative view which seems to be there, which is cultural issues, racial issues, well, anti-immigrants, anti-woke, anti-DEI, all that stuff. The sight of the ICE officials running around the country, throwing people into prison and ultimately throwing them out, is enough. And with the media as it is now, which will largely ignore these downsides of what's going on, and the hope that low information voters will continue to feel this loyalty to Trump. In other words, economics doesn't matter because nobody will really understand what's going on. And that would, of course, be a fascinating new possibility. But I tend to the view in the end that economics did play a role in leading the working class away from the Democrats towards Trump. And economics will, in the end, but I could be wrong, undermine this new coalition.
I guess I take a somewhat middle position on this, which is to say that I do think we're in a moment in which culture seems to matter more electorally than the economy in many circumstances. And in particular, I do think it's cultural issues that have played a huge role in alienating huge shares of a working class away from left-leaning parties, whether that's the Democrats in the United States or Labour in the United Kingdom, the Social Democrats in Germany, you name them. I also think that cultural issues are a huge part of the appeal of somebody like Donald Trump, particularly when the other side is in office. But I would temper this in two ways. The first is that cultural issues may be a little bit more of a draw than they look like. I think the Democrats are way out of the mainstream on cultural issues still, but so is Donald Trump. And so when Democrats are in power, I think people think, I'm sick of all of this stuff. I want Republicans to come in. But when somebody like Donald Trump comes in and does stuff that is also way out of cultural mainstream, I think those things cease to be an advantage to him. So there's obviously a part of his base that is very happy with throwing trans people out of the military, with doing mass immigration raids, including on people who've been in the country for a very long time, and so on. But I think there's a lot of people in the middle who are horrified by the open border with Mexico, who are very concerned about athletes who had gone through male puberty participating in female competitive sports, but who also don't want people who've been in the country for 30 years working hard to be rounded up and sent to El Salvadorian prisons, who also don't want trans people to be thrown out of the military. And since that middle, I think, is actually quite significant and big, there's a little bit of a weather vane effect where people are buffeted to and fro because they don't feel that anybody is actually speaking to them. Now, I think on economic issues, there's a little bit of a temptation at the moment to look at electoral politics and have a temptation, have a kind of feeling of, lol, nothing matters, right? You can say whatever you want, you can do whatever you want, it never seems to have an actual electoral impact. And I think that that's wrong. I think Biden lost in part because, as people like Jason Furman explained on his podcast in a great article, people just weren't doing better in 2024 than they had done in 2019 on average. There's many things on the economy that made people feel, I'm not feeling a lot better than I was 4 years ago. I think by the same token, if a lot of people lose the access to medical benefits, if they suddenly pay, have less money in their pocket at the end of a month, if they realize that all of these tax cuts are only going to the super rich, they're also going to become less likely to vote for Donald Trump's chosen successor in 2028. I want to ask you a little bit about both specifically what impact this bill would or will have on the lives of ordinary Americans, and in particular on some of the social safety net in the United States. And more broadly, where we actually are with the social safety net. I feel like, it's a cliche that America has much less of a social safety net than Europe, that it's a much more unequal place, that its taxation system is somehow less fair. And it's not obvious to me to what extent that is still the case, both because European welfare states have actually become rather less generous over the last few decades in a number of ways, because the American welfare state has in many ways expanded over the last decades, and because the American income tax system, for example, is much more progressive than the European one. Top rates of taxation are now roughly similar in many places, and you start paying a much higher share of your income, much lower down the income scale in most European countries, such that on balance, the American income tax system is actually more redistributive than the European one. So sort of how dissimilar are American and European welfare states at this stage, and how much of a difference to the overall sort of structure of a welfare state is this big, beautiful bill going to make in the United States?
Well, that's a complicated set of questions, and there are some areas here in which I wouldn't regard myself as the definitive expert, but I think we can say a few things which are pretty clear. First of all, the overall share of GDP spent by the government is very much lower in the United States, excluding federal and state governments, than it is in the US, in Europe. At its extreme, it's 2-1. Angela Merkel had said, I think, that we spend in Europe more than half of global welfare spending is spent by Europe. That was true, and the US is no exception. Now, what's important here is if you like, the welfare state, and this is my understanding of what's going on, there is a basic social safety net in America for the old. So Medicare and Social Security provide reasonable, though nothing comparable to, say, Germany, support for old people. And that was the achievement of FDR and LBJ. This is now, goes back to the 60s, and well, even earlier. And that has not been fundamentally eroded. There was a period in the early part of this century when George W. Bush thought about privatizing Social Security, got nowhere with that at all. But the benefits for younger people, people under 65 or whatever the current age is, I think it's changing, in Europe are much more generous, particularly family benefits, health benefits, of course, which are universal, which is a pretty big deal given the expense of healthcare, noticeably in the US. If you don't have a job which carries now health insurance, you really do have a problem in America, which you don't have elsewhere. So the safety net does apply to, very clearly, to the elderly, but it's much thinner to the rest of the population, with an important exception, which is, as I understand it, implicit in your question, is that they've actually tried to, they have ended up giving quite a lot to the poor. And so if you look at household income distribution of non-retired people, they have actually brought up the bottom somewhat. And I think one of the consequences of that, which I think is important, is that it's squeezed the differential in household income between, if you like, the middle classes who are not benefiting from this safety net for the old, and the poor. And Medicaid was an important part of that, really an important part. And the food program was also a very important part of it, both of which are attacked in this budget. But that did bring up the poor. And I think one of the resentments of quote unquote hard-working working class people, if you like, the broadly defined middle class in the United States, is they feel that the idle poor, as it were, from their point of view, is doing too well. And that's very much part of the focus of the Medicaid cuts. What people are arguing in the Republicans in Congress is these people should go out and work and therefore support their health care. Now, there's Paul Krugman has just written about this very recently, but the evidence that they're not working because of Medicaid is basically non-existent. But there is a reason for people to feel in the middle and non-retired people, nobody's doing much for us.
I want to shift to the second sort of set of things that we mentioned about the bill, which is the extent to which it's going to drive up the deficit and what kind of long-term consequences that might have. I mean, it's interesting that, in a way, there seems to be an elective affinity here between some fashionable theories on the left that are not taken seriously by economists, like modern monetary theory or magic money tree theory, and the attitude on the right among Republicans. Both of them now basically seem to be agreed on the idea that America has so much power in the global financial system that it can kind of do what it wants. It can try to influence politically the decisions of the Federal Reserve Bank. It can, rack up enormous debts. It can run a very significant budget deficit, and none of this is ever going to have truly negative consequences. And it's concerning not just that America is running such a serious deficit, that its overall debt is now so high, but that it's kind of unclear where in the political system the actors are that are going to turn that ship around, since it feels a little bit like a game of chicken, where each party is saying, well, the other party is not going to try and rein in the debt. Why should we be the stupid ones who do it on our watch and then reap the negative electoral consequences? Why is it that all of this has not so far led to serious adverse consequences for the United States in terms of its ability to refinance the debt and all those other kinds of things? And do you think that there's a serious risk that that might change, potentially with disastrous consequences, not just for the US, but for the world economy?
Well, the first question you asked is sort of the similarities between the left and right. And I think the similarity is the extremes of the political system share one thing, which is they would like to believe in magical alternatives. Because contemplating the possibility that you actually have to pay for things is rather depressing if you want to do some rather big things which shake up the whole system, and you don't want to inflict any pain on anybody who really matters. So that there I think they share something. That's very clear. The second point I'd make is in the last 40 years actually, 35 or so, the Democrats were actually the more responsible party. I won't go further back, but it gets more complicated then. And I do think the Reagan moment was decisive here, because Reagan promulgated for the first time from the right the principle that traditional Republican balanced budget ideology was over. And I always thought supply-side economics was a brilliant idea if you want to be on the right, because it released you from the constraints of fiscal probity, which is never very politically popular. And so that transformed politics. And so the next Democratic president, as it were, after the Republican landslide in 1980 was Clinton, and or 79, whenever Reagan actually won. I think it was 80, wasn't it? Was Clinton, and Clinton and Bob Rubin and Larry Summers, his Treasury secretaries, eliminated the deficit, and which was seen as a great triumph. The economy boomed for a whole set of reasons which I won't go into. And then promptly, when George W. Bush came into power, he slashed taxes like crazy and then fought a great war. And so they said to themselves, what did we do that for? And then there was the huge financial crisis, and Obama was really very responsible again. I mean, he really did a lot of work to cut budget deficits. They didn't do a huge fiscal boost. It was really quite modest, much less than I thought was necessary. Lots of other people thought was necessary. And so the growth was weaker, and partly because the growth was weaker than it needed to be, they lost in 2016. And Trump came in and he slashed taxes. We've just discussed that, and produced a huge deficit, and then the pandemic came along and produced a huge deficit. And then at last the Democrats said, well, that's crazy. We're not going to cut taxes, and we're just going to have a huge big budget deficit too, because there's no point in being responsible. Now, I don't think they lost because of that, but in any case, the Democrats have decided there is absolutely no point in being responsible. We won't get elected as a result. We'll just be blamed for slow growth. And the Republicans, and we're just handing the Republicans the opportunity to slash taxes, which leaves us with a much worse problem when we come in, because then stabilizing the budget means we can't do lots of spending. So I think you're absolutely right. Both sides have decided there is absolutely no reason to run a balanced budget. Then the question is, can they get away with it? And the answer, I suspect, is the one very simple. We can discuss the detail. They can't do this forever. Gigantic fiscal deficits are not a sustainable position forever. But if you're the US, in the current structure of the world economy, nobody has the faintest idea how long you can get away with it before there's going to be a big problem. The trouble is, if you wait until it really is a big problem, then it becomes almost unmanageable. It becomes an unmanageable crisis. And this is the famous Rudy Dornbush, a great MIT economist, died some decades ago. said, well, when things are unsustainable, this is a rough paraphrase, they can go on for much longer than you think they can go on for. And when they end, it's much faster than you can think. So that's the prudent thing, is don't go anywhere near that. But it seems to me absolutely clear from the discussion we've had that prudence is not represented in current politics. So I assume there will be a huge fiscal crisis, and I have absolutely no idea when.
I mean, that seems right to me. It nearly feels like the economy is a little bit like that Willy Coyote cartoon thing, where, once you've gone over the cliff, you are going to fall. But, when you're going to look down and when the fall is going to start seems difficult.
I don't think they're there yet. But at the present, if the things continue, the US is going to have more debt relative to GDP in 4 or 5 years than at any time in its history, including after World War II. And it will continue on up, almost certainly. And the US is hugely dependent, largely because of the fiscal deficit. It has nothing to do with trade and all the wickedness of so-called foreign traders, foreign countries in trade. Because they're running this huge fiscal deficit in a country where household and corporate savings are very low, they are dependent on foreign savings. And that means that the foreigners have to keep on buying their debt. A lot of it Europeans, as I said, also Japanese. And at some point, people are going to say, this is just too risky. Nobody knows when. It could be tomorrow, much more likely further back. But once you've got to that level of debt, 150%, 180% of GDP, and interest rates start getting up, real interest rates to 4 or 5% or even higher, then the fiscal manageability of debt becomes, there is none, and you have massive inflation. The central bank will be overwhelmed, and here a crucial factor which may accelerate the crisis is that I think Trump clearly intends to replace Jay Powell with an inflationist central banker. And I'm going to assume, therefore, he will tell him to cut rates just while he's trying to sell vast quantities of bonds. And that could, I stress could, accelerate the crisis significantly, just as in a very different way, Nixon's pressure on Arthur Burns in the early 70s created the great inflation of the 70s, along with a few other things, which destabilized the US so much.
There's another striking thing about the US economy that I've been wondering about, and I would love your help in thinking through this, which is that the United States has, about 5% of the world's population. It has, I believe, about 50% of the world's stock market capitalization. When you look at US companies, they make up about 50% of the global stock market. This is partially because America has actually been astonishingly successful in keeping its share of global GDP, even as Europe's share of global GDP has declined very significantly over the last 30 years. America slightly declined, but didn't decline all that much, despite the astonishing rise of China and of other countries around the world. Is this sustainable? I mean, is it really imaginable that 25 or 50 years from now, half of the valuable companies in the world, or half of the value produced by companies in the world, still comes from the United States? I mean, what is it that has allowed the American economy to be so phenomenally productive? And don't we have to assume that some amount of reversion to the mean is going to happen at some point? And what would be the political consequences of that?
Well, my assumption is that almost none of this is sustainable, and you have to separate out little elements. First of all, the US has about a quarter of world GDP at money prices. That has been roughly stable for the last 30 years or so. That's an achievement. But a lot of this has to do with the strength of the dollar. And the strength of the dollar is actually related to the strength of the US stock market, which is a lot of what's driving up the dollars is the capital inflows. There's a very, very great enthusiasm about owning US assets. More broadly, because US assets look so impressive, because the firms and this is the stock market is an important part of this because U.S. firms look so impressive. Now the question is whether that is real. Let me just sustainable. Let me just give some doubt on whether the situation in which people are pouring money into the US, even more gross than is needed to fund the net deficit, these are net figures, the deficits, and drives up the value of the dollar, which drives up the relative size of US GDP. If we do measure GDP as I like to do, economists like to do in purchasing power parity terms, which is comparable real income, the US share doesn't look anything like as huge. It's much smaller than China. But I won't go into those differences because it's sort of a bit wonkish. But anyway, why might not sustain? Well, I'll give you two reasons why it might not be sustained. First, this is not the first time that a country has had a stock market value which is wildly out of line with its relative GDP. The last country that had that was Japan in the 1980s. There was a period, I'm quite sure of this, I can't give you the exact years because it's so long ago, and when the Japanese stock market was more valuable than the American stock market. And I remember noticing this, and there was a lot of discussion. How could it possibly be sustainable? But this was the period when this famous story that the land on which the imperial palace was situated was more valuable than the whole of California, and that was, the most famous statistic about a super bubble. The stock market collapsed, the land prices collapsed, and Japan had essentially a 20-year deflation. Now, I'm not saying that will happen. But I just remind you that the relative value of stock markets can be very, very crazy if there's a huge bull market. And then that gets you to the American size. Obviously, American corporates are strong in some sectors, and that is true and real. So I don't want to say it's like Japan in the 1980s, but if you look at standard measures of value of underlying earnings, the American stock market is currently as highly valued essentially as it has been in any bull market since the 1880s, right? As high as in 1929, as high in 1999, to all intents and purposes. Despite all the problems we've been discussing, nothing affects this value. The implicit assumption is that the American corporate sector, and above all the tech sector, which plays such a big, will go out to earn ever greater monopoly profits for the indefinite future, and will drive the market values of corporates, sustain these market values of corporates and the profit shares that underlie them. And all I can say is I find that, given the politics of what's going on in America, given the politics of the world in response to what's going on in America, and given the assaults on the rule of law and on research and all the other things that are going on in America, I find that story really difficult to believe. And it seems to me one that people are holding to because it's played out very well in recent decades. But I would be very surprised if 20 or 30 years from now we would still see this phenomenon. And maybe partly because the idea that AI will generate limitless profit booms for the tech sector will turn out to be as unrealistic as the internet bubble turned out to be in the late 1990s, which was also turned out to be hugely exaggerated. And there might be a perfectly good reason which the profits from AI will accrue to the users. The users will be everywhere, not just in the US. And the companies that are investing zillions in the very expensive process of producing AI models will actually not get much of a return on them. And that's completely consistent, by the way, with what's happened in every major technological revolution in the past, railways onwards.
I would love to hear your thoughts on the Chinese economy. I know that you're obviously not an expert on the Chinese economy, but you did tell me that you've gone, with the exception of a pandemic, to China every year for many years. and you keep a close eye on what is going on there. I'm trying to figure out the mix of advantages, strengths and weaknesses in the Chinese economy at the moment. I just spent a little bit of time in China. I know the country far less well than you do. I was both struck by some of the famous things on which China is genuinely impressive, including the way in which technology has penetrated into everyday life, the very developed service economy, which makes life there very comfortable for at least the middle class, the way in which China clearly is now ahead on parts of the green economy. In Shanghai, you can distinguish between cars that run on fossil fuels and cars that are electric by the color of a number plate, and certainly a majority, and perhaps closer to a supermajority of cars on the street do seem to be electric, including virtually all cars that are used for cabs and so on and so forth. At the same time, I'm struck by the fact that the country still has a GDP per capita of only about $10,000. That may be slightly undervalued because of the exchange rate, but it is far from the levels of North America or Western Europe, for that matter. I'm struck by how harsh the lives of many people there are. I spoke to a lot of cab drivers, not to sound like certain famous columnists, most of whom were not from Shanghai, most of whom lived in dormitories with their middle school or high school friends back from the villages in the faraway provinces from which they came, many of which have perhaps a wife and a child, but they get to see those once a year, all of whom said the same phrase to me independently of each other, which is "Yali henda, yali fei changda," which means the pressure is very high. I'm really feeling the financial pressure on me. And strikingly, a lot of young people are having trouble finding jobs, are quite pessimistic about their personal future, are, if my conversation partners there and some studies are to be believed, less ambitious than people over 30. They think that the economy is kind of rigged against them. They can't afford to ever buy a home in Shanghai and Beijing if the parents aren't from there and aren't very wealthy, and they don't really aspire to great economic success. Many of them want to go back to the third or fourth tier cities, as they're called in China, that they may come from where the parents live and have what they call a putong shenhua, a common man's life. All of which is surprisingly concerning about the Chinese economy. And then, of course, you ladle onto that the fact that birth rates are a problem everywhere, including certainly in Western Europe and in Southern Europe, where I am at the moment, but a very big problem in China, including its most prosperous cities as well. So, how would you see the balance of those strengths and weaknesses of the Chinese economy?
So, I think these are very fair questions, and you've summarized a lot of the issues. And I think and it is really rather like what I said earlier, slightly different. The best answer is we don't know. If you're serious about it. So let me just give a very quick summary of the two sides. Let me tell you the optimistic story and the pessimistic story, or perhaps the other way around. The pessimistic story, I think, would go something like this. China has three big problems if we ignore, maybe four. First of all, there's a trade war going on. The future of the world economy is uncertain, and trade is a fairly important part of the Chinese economy. I don't think that's decisive for China, subject to some of the other things I said. The ratio of trade to GDP has actually fallen dramatically since 2008. When we say globalization is ended, trade has stagnated relative to world GDP, it's often not realized that the country that has actually reduced its ratio of trade to GDP most, it's roughly halved, is China. So it's less trade dependent than it was. It doesn't have the huge current account surpluses it used to have. Yes, the trade war will hurt China, but it's not going to destroy the Chinese economy. Absolutely not. They can certainly replace the lost demand if they need. So let's not exaggerate the impact of the trade war. I think the trade war is going to hurt America at least as much as it's going to hurt China, though more on the supply side. The second big problem they have is very unbalanced demand. If they, and I've written about this now forever, this is an economy in which national savings, basically household savings and corporate savings, which is corporate retained earnings, profits, are about 40% of GDP. And to balance supply with demand, investment has to be 40% of GDP, roughly. That's just follows logically. And if it isn't, you get a very, very weak economy. And that's been a big issue, particularly in the last few years since the real estate bubble burst, because so much of the investment was done in real estate and also infrastructure, and there's no case for that anymore. So they have to find a way of either redistributing that money to households and public consumption, or doing a lot of investment, and most of that investment is not very productive. So, and that's shown in the fact that they continue to invest 40% of GDP, and the growth rate has collapsed. So they're wasting a lot of capital, and they're generating a very extreme problem in terms of sustaining demand. That's the second big issue, the imbalance. And the third problem, which I think is immensely important, is that Xi Jinping has intervened much more in the economy than under Deng Xiaoping, and he has really frightened the private sector. And that undermines the animal spirits of the private sector. And there's absolutely no doubt that the growth of China in the 80s, 90s, and 2000s was private sector driven, just overwhelmingly in competition for the private sector. And his statist orientation, though I think they have clearly done some very good investments, above all in clean energy, and they've done great successes in technology, but it's not driving the whole economy. So these are three very big so these last two, imbalances and the state, the domination of the state and the state war on corruption and all the rest of it, it kills animal spirits. And in any case, this unbalanced economy is not naturally going to produce the productive investment that will drive faster growth. And finally, the demography is crucial. Is important, though you have to remember that China still is not a fully urbanized society. There are still hundreds of millions of people in the rural areas, so they're not yet actually labor constrained. What is certainly true is they're not generating enough of high quality jobs. So that was my rough assessment of the arguments. They're in terrible trouble, and I would say none of them is overwhelming, though they do have real problems. And the most important ones, however, the imbalances and the over-centralization by the state, are subject to policy if they're prepared to change policy. So the biggest question, in a way, is how does the Xi regime respond to difficulty? And so far, I would say, not as well as one might hope. He's going quite a long way for Dong. So that's where I would say the pessimistic story lies. But I would stress also the upside. Let's assume they fix these problems, very big assumption. As you rightly said, China is a very poor country still. And we know the Chinese are extremely capable people with incredible talent for learning and acquiring technology. All the sectors they're now leaders in, they didn't have 20 years ago. They didn't exist. I mean, I can't think of any country, not even Japan or Korea, which absorbed, developed, and progressed with Western technology at the rate China has done. And it's still a relatively poor country. If you look at your number, they have a GDP per head, I think, about a sixth or a seventh of America. If you look at it in PPP terms, it's still a third. That means they have enormous growth potential. And yes, the demography is a problem, but as I said, they've got to still move a lot of people from the rural areas, and the Chinese young people are educated. I mean, dramatically so.
One thing that I found striking when I was there at the time that people were taking the Gaokao, the high school leaving exam, which not all Chinese take, but a very significant proportion of Chinese take. and nearly all of them take an English test as part of a Gaokao. And a friend of mine there sent me screenshots from, I think, the previous year's high school leaving exams English test. This was 700 word technical passages about really quite specialized things, about which you would then have to answer SAT-style questions of interpretation, which really hinged on grammatical niceties. I mean, I didn't struggle to answer any of those, but some of my students, I think, would have found some of them hard. And then I came back to the United States and I heard that the College Board had recently reformed the SATs in such a way that because the attention span of American students has declined so much, perhaps because of social media, they're now going to ask 150-word questions. They're now going to have students read 150-word passages and have them answer a single question about each passage. So I think that the English language exam, foreign language exam on the Chinese Gaokao is at this point quite clearly harder than the reading comprehension exam for native speakers in the United States.
Well, that's overwhelming, and I would add, I don't know the exact figures, but the Chinese are producing vastly more engineers. I mean, competent engineers in absolute terms. I think 5 or 6 times as many as America. And these are really brilliant people. So their long-run potential, okay, population may fall somewhat, but it's going to remain far bigger than America for the next century. So they have some real issues, but they have the rural population still bring in. So the potential, so if they get the policy right, can we really argue that it is inherently impossible for the Chinese to achieve, say, the same GDP per head as Western Europe? From what we know of the Chinese, what they've done, if they get policy right, is it impossible for them to have, let's say, and I'll give you an example, which is my favorite one, the same real GDP per head as Portugal, which is about double theirs, roughly. Well, if they had that, then their GDP is as big as Europe and the US together. So the point is,
and I think
they have to do very badly, which they easily can, but they have to do very badly not to continue to rise. And my bet has always been that in the end, the Chinese people will not allow the Chinese state to fail them. I mean, that's why Deng did all those reforms. I think that the failures of the Xi regime will make it difficult for him to sustain a repressive policy of this, which affects the economy in this way. This could be wrong, but that's my bet. And I certainly think it's a very bad mistake for the Europeans to bet that they will fail, because what we've seen from China in the last 40 years is such a remarkable indication of their capacity to succeed. So I think the strategic bet should be that China will succeed. And by the way, I also think, since we talked about India, very different story, we can discuss it in detail if you want, but my view is that more likely than not, that India will grow at 6%, 6.5% a year in real terms for the next 20, 25 years. It's still a very, very poor country. And at that end of that, India will be a huge economy too. The world will look different.
So 2 points here. The first is that, the confidence levels here are enormous. My hunch about China is that it may, for the foreseeable future, be considerably poorer than the United States or even than a place like Germany per capita, but that it might reach the levels of something like Portugal, that it's going to continue.
That would still make it a very big country with some very sophisticated bits.
And that's the point, right? I mean, like Japan, despite the incredible hype of the 1980s, did not end up being a richer country than the United States. It's quite considerably poorer. It did not end up taking over the world economy, but Japan is a much, much smaller place. If China managed over the next 20 or 30 years to get to a similar economy as Japan, given its vastly greater size, it would become very, very, very influential, if not dominant, in the world economy and possibly in geopolitics as well. So even a kind of medium estimate for how the Chinese economy develops will make it an incredibly influential place. But I did, in fact, want to ask about the subject which you teased a moment ago. I know you mentioned, but you were recently in India, and it's a place that you know well too. You go back 30 years, and the Indian economy and the Chinese economy are roughly of equal size, certainly in per capita terms. At this point, China is, depending on the exact statistic you look at, 5-6 times bigger in absolute terms, 5-6 times bigger in per capita terms than India. Why that divergence? Why, despite the significant progress that India has made, is it so far behind a place like China? And what would it take for India to go from having a GDP per capita of $2,000 or $3,000, where a lot of people are still very, very poor, to an economy like China, where not only there are a lot more people who are doing very well, but even the people who aren't doing that well are having much better lives in terms of access to stable food supplies, in terms of having a high quality education, in terms of being able to afford good medical care, and all of the things that, even for the median Chinese citizen, who's still much poorer than anybody in America or than most people in America or Europe, are now very affordable, that for the median Indian citizen still remain beyond reach.
That's a very big set of questions, and I won't go into them in great detail. But first of all, I do think that the best way of thinking about this is, as I said, in purchasing power parity, because it's a direct measure of welfare in real terms. And it transmits over time to nominal GDP for reasons I won't go into now. So on that basis, China is basically a third in real terms of US levels, real incomes per head, and India is a third of China, roughly. So that gives India about a ninth or a tenth of the US. It's a poor country, lower middle income as they call it. It's a very poor country. So there are two big questions here. One, why did India fall behind China so much? And can it catch sharp? Well, it's the third. And then where would it leave the relative levels? India fell behind China, I think, for three main reasons. One, the quality of human capital, of education, of health that had been created in the Maoist period was actually quite impressive compared to India. And so the human ingredients in the period when they were roughly the same were a bit misleading. The Indians had and still have tremendous problems with the quality of their education and of their health system, huge gender inequalities. Basically, it hadn't changed as much. And here, probably the truth is, it's partly cultural. China is used to a history with a very strong state, which India has effectively never had. And it's partly because the Chinese state was very ruthless and was prepared to ensure these things happen, along with catastrophes like the Cultural Revolution and the Great Leap Forward. That's the first point. The second point, the Dengist reforms were much more ambitious, vastly more ambitious than the Indian ones. They really opened up the economy. They really released the energies and efforts of the Chinese people. They opened up stupendously to foreign investment. I mean, it's quite surprising that they did so. And they encouraged people, as in the famous word of Deng Xiaoping, to get rich is glorious. And no Indian politician said something like that. I mean, the dominant thrust of Indian politics for most of this period was rather the opposite. And that's reinforced by very deep cultural obstacles to complete opening and competition among people, and emphasis on getting ahead, of which, let's be quite fair, the most important is caste, which is a fundamental reality of India, and there is no equivalent of those obstacles. Everybody in China thinks they can get to the top. Lots of people who have got to the top and come ultimately from very ordinary backgrounds. Much more difficult in India. It's not impossible, but it's much more difficult. And the
I am struck by
liberalization,
this even anecdotally. I mean, at this point, I know a good number of members of the Indian elite, some members of the Chinese elite, at least certainly the Chinese upper middle class, and um, you know, most of the people who I know in India know other people who I know in India on quite intimate terms. Not just because they're in some small social circle in think tank world or something like that, but often because their families are friends, often because they went to the
yes,
same set of schools.
yeah,
Nothing similar is true in China, where there is a kind of princelings at the very top of the CCP hierarchy, and that I think is in various ways a challenge to the country.
yes.
But when you look at the top echelons of society, at the kind of people you meet in places like Shanghai and Beijing, etc., their ancestors come from all over the country and from up and down the social scale. And they don't have anything like the caste background to make themselves feel like there's an unbridgeable gap between them.
It's a far more modal. Lots of people became billionaires from the most humble backgrounds imaginable. A lot of women, actually. I mean, this really was open. And the complete liberalization of the communes, which opened up the rural economy and township and village enterprise and all the rest of it in the 80s. There's no equivalent of that opening that occurred. And then, of course, there were all the foreign Chinese investments, the people from Hong Kong, Taiwan, and so forth, who poured in as well. So the opening and dynamism associated with that was extraordinary. And basically, the state had been very badly damaged by the Cultural Revolution. That actually rather helped too, because it wasn't functioning that well. So for all these reasons, China was culturally and policy-wise really radically open. And the final thing I would emphasize, and this is the thing that I find most extraordinary, is because it's so about the capacity of the Chinese people and state for large-scale organization and construction is beyond belief. It is completely unique in the history of the world. And I'm going to give the example which to me is the most amazing thing. 25 years ago, China had no high-speed railways. Now they have well over 16,000 kilometers, which is half the high-speed railways in the world. Now, there are lots of reasons why they could do it, but as an organizational feat of doing that across a continental-sized country, it's unbelievable. And of course, India can do this, but they can't, and they've done well. I mean, they are making progress in infrastructure. It's obvious when you go, but it's nothing like this. And another example, I don't know the exact figures of these, this is something I was told, but back in the early 1990s, almost nobody in China went to university. I mean, there were 2 or 3% of people, I think I was told, have been to university. Now, in the young, it's about half. And that's one of the reasons that they've got all these young graduates who don't have good jobs, because, well, we've got the same problem in Western Europe. If half the population go to university, it's quite difficult to produce good jobs for them. But this capacity for large-scale mobilization and self-mobilization of the people is absolutely extraordinary. And in these respects, let's be clear, they're better than the Europeans or the Americans. I mean, what they've done in mobilization terms and investment and transformation of the country is just staggering. I can remember 20 years ago having discussions in Beijing with with Westerners, experts, business people, professors, and so forth, and they all agreed, well, we can't imagine the Chinese will ever produce an internationally competitive company. That was 20 years ago.
Wow. Talk about
do I need to list them? So this is quite extraordinary. And India has produced internationally competitive companies, but not on that scale. There are some internationally competitive businessmen. India is very, very impressive. I don't underestimate it at all. But the mobilization the Chinese have achieved is very great. And now I think the Chinese great danger is the overmighty state and the overmighty emperor, the god emperor, as it were. Excess centralization leading to ossification, and I think it's a real danger. The great problem in India is to create a society in which everybody is self-mobilizing, as it were, and mobilized. And one of the things that struck me when I was there in some discussion just last week, there's still immense gaps in labour force participation between women and men, for example. The incredibly poor standard of education in much of the country for the people, the fact that India hasn't really industrialized. The growth has been overwhelming in services, a lot of it on informal services, of course, also very sophisticated services. But there are no Indian equivalents of the hugely successful global manufacturing companies we see in China. So some of it may be to do with democracy, some of it to do with culture, some of history. But India is a very, very different civilization. The thing that struck me, I've been going to India since the 70s, that it's a very different society from China. And I expect that advantage to remain. Nonetheless, India is a very poor country and poverty is an opportunity. It means there's a lot of things they can improve. They know they can get better off. And this is crucial. In the last 30 years, for the first time, as far as we know, in the history of India, people know they've been getting better off. It's got into the country. You can see it when you go around the cities. So different from what they were half a century ago. People want and expect to get better off.
Where is Europe going to be in all of this? It is quite striking, and I think certainly very realistic based on current trends, to think that the three great powers will be China, the United States, and India, perhaps in that order. Europe is noticeable by its absence from that list. Do you think that there's a realistic chance that Europe might get its act together in such a way that it defends its current position in the world order as not one of the great powers, but still one of the leading sets of economies, that still represents a significant share of global stock market capitalization, that certainly provides its citizens with a very good or decent life? Or are you very pessimistic about the ability of Europe to implement technology, to sustain its position as a world leader in areas like the car sector, where that position is very much threatened at the moment, to make the necessary political and economic reforms to actually play on the world stage? Are we destined to be the continent of the past, or is there some hope that Europe can avoid that fate?
Huge question. Europe has been, in aggregate, in long-term decline for most of the last century, if you measure it properly. So the peak was, as far as we know, in the early 20th century, about the time of the First World War. And since then, first the US, continuing, and then, although that started earlier, and in the post-war period, basically Asians have changed that relative position. But, of course, Europe, for most of this period, has continued to get richer. And it continues to get richer, just much more slowly than it did in the great post-war boom. And I think it's, if you think of Europe as a whole, the current EU, and perhaps you throw in the UK, I think it's perfectly plausible, with modest performance, that by the middle of this century, so it's 25 years from now, Europe will, in aggregate economic terms, continue to be in the top four. But if you think of ability to exert influence upon the world and protect itself and all the other things, a lot will depend on its capacity for action as a collective. Will Europe be a bunch of nations which are fundamentally divided within the EU? Or will it be more effective than that? Or will it actually disintegrate? And given the tensions on it, the rise of the right and so forth. And then, of course, the important thing is the rise of the right in Europe tends to be the rise of the anti-Europeans, which is obviously a very significant fact. I'm afraid I'm very sceptical about the political future of Europe. I think the vociferous tendencies are very, very powerful. I hope I'm wrong. That's the first point. You would have stronger views on that probably even than I do. Then on the economy, there are two classes of very big problems. Demographic we discussed, that's common to China and Japan and not unique. But we are very hostile to immigrants, so the demographic problem will not be solved by immigrants. So I think that's pretty clear. So it'll be there, and it will constrain growth, certainly vis-a-vis the US. And the ability to mobilize the European market to support growth, which is so obviously important in China and potentially important in India and obviously important in the US, is limited by all the factors that Enrico Letta and Mario Draghi have outlined in their reports, which is ultimately Europe remains in crucial respects a continent of separate national markets. And nothing that has happened in the last years or so, a little less since these reports were published, suggests to me that's going to change. And the issues involved in going beyond the national markets really do get to the heart of sovereignty. Because the sorts of things they have to do what Mario Draghi wanted to do, are things that involve giving up sovereignty in sensitive areas, notably finance, which is so intimately related to the state. So that's the second big question on the future of Europe. And the third, as you rightly said, is technological. I put forward the view in some German friends recently, but it fits with what you said. A way of thinking about the European economy today in the last half century is with a couple of really important exceptions, the Europeans have been overwhelmingly dominant, particularly the Germans, but also Italians, so forth, have been dominant, and leave aside the luxury sectors in which they're uniquely dominant, but not the future of growth. But they have been dominant in raising the industries of the second industrial revolution to an extreme level of sophistication. And the most obvious example of that is electrical machinery and machinery more broadly, and the automobile industry. All of these industries were invented in the 19th and early 20th centuries. They are old industries. And with that goes the fact that most European companies are comparably old companies, even the very big ones. And that's totally different from the Americans or the Chinese. Well, most of their big companies are completely new, obviously, by definition. And so are many of the Indians. So the European economy has the appearance, very clear in Britain, of a museum. When was Mercedes-Benz invented? When was Siemens created?
The fact that I always use is the biggest German tech company is called SAP and was founded in 1972.
The creation of companies which become world leaders in new industries is not something happening in Europe. And my instinct is to feel the life science is working better, so it's not, but it's very important in these sectors we're talking about. And that's a structural problem now, because the future development of these industries, which are clearly in some sense the industry, are built on the existing advantages, and Europe doesn't have them. So it does seem to me that's a really, really big problem.
Martin Wolf, thank you so much for giving us a tour d'horizon of the entirety, not quite the entirety, but a lot of the world economy. Thank you so much for spending this time with us.